All right, now we get into the big kahuna. This is where a lot of points will come from on the exam. So these are the categories for debt investments. Like we said before, we have trading, available for sale, and held to maturity. A lot of these questions are going to be as simple as memorizing this, right? So, oh, how do I value available for sale securities, debt securities at fair value? Where do I report the unrealized gain or loss for trading? Oh, it's in net income. It really will be as simple as that. Let's talk about that a little bit more in depth. Well, you report held to maturity securities at amortized cost because if you remember from bonds, or if you haven't seen bonds, you will see that you do your carrying value, right? You amortize the bond, and that's what you report it at, right? It's its original face value minus any amortization. So it's our carrying value here. Unrealized gain and loss, well, there is none. You only have interest payments for securities, right? There's no unrealized gain and loss, so there's nothing to report. OCI, ding, ding, ding. You might remember this from going over OCI and making a point whenever we see this throughout our chapters to bring it to your attention, right? OCI is going to be separately stated from net income, and available for sale debt securities report their unrealized gain or loss. So if you're holding debt securities available for sale and there's unrealized gain or loss, well, you report that in OCI. And then unrealized gain and loss, trading securities, is in net income, also known as earnings. Where do you report them in the statement of cash flow? Not as important as these two columns, but just here for your understanding. Trading securities, we use these to generate profits from short-term differences in prices, right? So you're thinking about like you're trading stocks, you're trading bonds. Holding period is usually less than 3 months. I'm going to jump over here because if it doesn't fall into one of these two categories, it's in the middle as available for sale. Held to maturity, we have a positive intent to hold the securities and the ability to hold them to maturity. So basically, we'll hold them to maturity and we'll classify them as such if it makes sense, right? If we're actually planning on doing that. And the auditors come in and make sure that that's actually what you're doing and actually what you should be doing. Now, like it says here, if the security does not fall into one of the other categories, it belongs here. It really is as simple as that. Now, here's transfers between different debt categories. It's pretty much the same as before. Well, if we're going, so like, let's say we have a trading security and now we want to reclassify it as available for sale or held to maturity. It's already been recognized in earnings, net income, so no adjustments necessary. If we go from any other to trading, if we go from available for sale or held to maturity to trading, we recognize this gain or loss in current earnings, right? Which is what we do for trading. And these charts, definitely memorize them. If we go from held to maturity to available for sale, wouldn't you know it? We kind of just saw this, OCI. And if we go from available for sale to held to maturity, we amortize gain or loss from other comprehensive income with any bond premium or discount amortization. Basically, don't worry about too much, right? Generally, it's going to be whatever you send it to. It's whatever you send it to is the treatment for it. So generally, there is not going to be any to recognize here, but if there is, that's your treatment. And we'll see examples, questions, but definitely this is more memorization based. It'll give you free points on the exam. Transferring debt securities between classifications. So what are some issues? At what value is the security transferred? How are gains and losses accounted for? And what is the effect of the gain or loss accounting on income and equity? We talked about some of that. We'll see even more of it. Let's move onward.